Thank you for joining me. I'm Alex, and I would like to talk about Intel today. I've done a video on AMD actually 3 months ago, so figured that after IBM it would be time to do Intel. So what they do is processors, SSDs, and microchips, which actually includes the first two, but obviously there's miscellaneous microchips that they do in addition to all the processors, which is the main business, and the SSDs that they make. They actually, I think, sold their 5G modem department to Apple recently. So I'm not sure that's really a good idea here, but it happened. So current price just under $60, which gives them a market cap of $295 billion. Dividend yield is 2.1%, which with a payout ratio of 29%, which is certainly amazing. Current revenue, $70.8 billion. Current earnings, $21 billion, which is up over 100% from the previous year. And the previous year was slightly down, but in line with the previous years before that. So the earnings growth is actually very significant here. So that gives them PE of 14, or slightly under that. Total assets, $128 billion. Total liabilities, $53 billion, which gives them a total stockholders' equity of $75 billion, which is certainly, number one, amazing, and number two, the best balance sheet I've ever seen. So what you're looking for is an assets to liabilities ratio of 2 to 3, which this is right there in the middle. So that is amazing. The PE is, it's not amazing, but it's definitely good. Earnings growth is amazing, but obviously they're not going to go for 100% growth every year. So the trailing 12 months and the year ends in December is just in line with the previous year, or the last year. So there's going to be earnings of over 20 billion probably. So pretty much in line with the current year, definitely not a growth. Same goes for revenue. Very much in line with the last year. Dividend yield is amazing. Payout ratio is amazing. So nothing more you can say here. Now, I think that pretty much all the risk factors have played out already. They've been wanting to get more mobile chips going, and that hasn't really worked out for them. They wanted to get into the cell phones, tablets, and all that kind of thing, and their efficiency hasn't really been there. So that really hasn't worked out, and they haven't really put a lot more resources towards that. So it seems like for now they've pretty much given up on that. I would say that there might be a play there at a later time, because with the efficiency constantly going up, I think that Intel chips in cell phones and tablets would definitely be a good thing for both developers and hardware manufacturers. But right now everything's on Android and iOS, so I really don't think that would be an easy way. So I'm going to just discount that for now. But on the other hand, they're in a tough spot right now with AMD attacking them, and AMD actually having better processors for the first time in about 20 years. And that's a problem for now on the desktop and on consoles, which use AMD chips right now, and might be a problem on servers later because of the Threadripper processors from AMD being very good right now, and probably being scaled better than Intel processors, which come with up to 28 cores. So for that reason, Intel is being under attack right now, but obviously the numbers are looking good right now, and obviously they have the budget to fight against that. And I think that over the long term, they can still win that battle, and they will never be irrelevant, because there's always going to be the two manufacturers right there in Intel and AMD. Now, you also have a lot of other people coming into the space or wanting to come into the space, which is Apple, which is Amazon, which is a few others, Samsung for one. So there's a bit of turmoil, but I don't think that that's a risk right now, and I'm not sure how much that's worth in the future. So for now, this stock looks amazing for value investors. It looks amazing for dividend investors. It doesn't look amazing for growth investors because there's not a lot of growth to be had right now. And I don't think there's going to be a lot of growth in the future either. So as a growth investor, you're just going to be out at this point. And as a value and a dividend investor, you're going to have to consider that the growth is probably non-existent, maybe even negative over the next few years. But I think that all of the other factors make up for that. So I think this is worth looking into right now. And I think this is an amazing stock for both value investors and dividend investors. And I think it'll stay that way for the foreseeable future. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.